your screen there the red and blue and black bars. Okay, I'm continuing on with the same stock we've been using just to maintain some consistency here. We're using ZRAN, and this is actually a 60-minute chart that I'm looking at now, and I've taken it back into training mode to 11:30 on the 26th of June. That's where we're going to begin. What you're seeing here on the chart is the XTL tool turned on, and XTL stands for Expert Trend Locator. And what we're essentially doing with the XTL is just trying to identify a trending market. If I back it up here, you'll see on the 3rd of June at 1:30 in the afternoon Eastern Time, we established a red bar. That was the XTL coming to the understanding that we're anticipating a downward trend in the market. So red bars equals a downward trend. We go a little farther here and run into the 17th of June and run into some blue bars. Blue bars are identifying an upward trend. And a little bit further over here to the right, on the 25th and 26th of June, we have black bars, which is indicating a neutral territory. The XTL is not identifying a trend at all. So that's the basic premise behind the XTL. Red bars are a downtrend, blue bars are an uptrend, and black bars are just neutral. What we can do with this study is start to apply some additional rules onto the trending markets that the XTL is identifying. In this case right here, at 11:30 on the 26th of June, we go from black bars to a first blue bar. Anytime we have a first bar of either blue or red, we call this the breakout bar. So back here when we went from blue to red on the 23rd of June, this was a breakout bar in the down direction when this first red bar came in. And now on the 26th of June, we have a first blue bar, which is going to be our breakout in the up direction. So the first step in identifying using the XTL tool is to find the breakout bar, which is what we've done here. Now, along with this breakout bar, we need to apply a set of rules in order to get us triggered into the market. Having a breakout bar in and of itself does not trigger us into this market. We need to apply a triggering technique. What we do to apply this trigger technique is we essentially measure the overall height of this bar. If you look in the upper left-hand corner of my get window, you'll see the open, high, low, and close listed there for that bar. And our high is $19.17, and the low is $18.90. So we've got a 27-cent range on this bar. And essentially what we're going to do to trigger ourselves into this trade is we're going to take half of 27 cents and add that to the top of this breakout bar. Now, we could all figure that mathematically, but we go ahead and use the Fibonacci extension tool to make this a little easier on ourselves so we don't have to continue to be doing math every day. So I'm going to take the Fibonacci extension tool, and I'm going to make my first click at the bottom of the first breakout bar. Second click will be at the top of the first breakout bar. And I'm going to drag my mouse out and to the right and apply that again to the bottom of the breakout bar. Now you notice a 1.618 value, and if we looked up here farther, we'd see a 2.618. Those are the default extension values. I need to go ahead and right-click on one of these lines, which brings up the Fibonacci value matrix, and turn on the 1.5 value, and I'll turn off the 1.618. When I apply that, that shows us where our 1.5 line is, which is 1.5 times the overall height of this bar applied to the low, which gives us our 50% above the breakout bar. So this is going to be our trigger to go long in this market. Now, just like we have a trigger in any market, we should also have a stop whenever we're considering entering a trade. The stop is going to be the exact opposite of the trigger. We're going to subtract 50% of the low of the breakout bar. I'll do the same thing in the Fibonacci value matrix, and I'll make this value negative 0.5. And when I apply it, here's our stop line below it. So we have our first breakout bar we take 50% of the first breakout bar and add it to the high to give our trigger. And we subtract 50% from the low to give us our stopping point. So in this market, $19.32 is going to be our trigger to go long. At $18.76 is going to be our stop. I'll go ahead and advance a few days in our training mode here. And here we see on the 27th at 9:30 in the morning, the bar breaks above $19.32 and triggers us long in this market. As I continue to advance, jump up and down here for a few days. Again, I'm on a 60-minute chart, so each bar that I add here is 60 minutes. And there the market finally starts moving in our favor, and we're starting to make some profits. So that is how we get triggered in a long position in an XTL breakout trade. In the short position, it would work exactly the opposite. I'll just go ahead and back up here, and I'll use my Fibonacci extension tool. In the short position, I'm going to click first on the top of the bar, then on the bottom of the bar, and I'll just stretch it out so we can see it. I'll apply that to the top of the bar. Right-click on my Fibonacci extension line and turn on my 1.5 value and change one of the other values to negative 0.5 and hit OK. And you'll see on this market here, we were never triggered to go short, and we got stopped out when the market hit our negative 0.5 value. So this breakout trade never happened to the short side at that point. It would have happened again over here on the 6th of June. Go ahead and remove that. We had a few black bars in here, so we can signify this first red bar again as a breakout. And if we were to apply the same thing, which I'll do a little quicker this time, negative 0.5, turn that one on. So at $20.15, we'd have been triggered to short this market, which eventually wound up in the $17.50 range. So that would have been triggered to short, and over here would have been a good trigger to go long in ZRAN basis an XTL breakout trade. Are there any questions on triggering the XTL breakout trade? Okay, the stop on the one that we're in now is going to depend on your money management strategies. For myself, a very simple way of doing things, I would go ahead and take the regression trend channel, find the low after I got into the trade, and apply that to the high that we have currently in the market. And if the market were to break below this red channel on the regression trend channels, I would be out of that position. Now I'll go ahead and advance some bars. We made new highs from the bar that I drew it on before. So I'm going to go ahead and erase my regression trend channel and redraw it based on the new high that we've established. Add a few bars in here. And right there we've broken out of the regression trend channel. Right, that would be my exit on this trade. Correct. Okay. Okay, again, the stop when you first are entering into the trade, I'll go ahead and draw in my trigger mechanisms here again, using the 1.5 and the negative 0.5. And this negative 0.5 line is your stop until you become profitable in the trade. So if this market right in here would have continued in the downward direction and gone below $18.75, that would have been my stop, and I would have exited the trade at that point, taking a small loss. So until you're profitable, use this negative 0.5 as the stop loss in your XTL breakout trade. Something like that, yeah. So that's just the breakout trade. That's just one way that we can use this XTL tool. I'm going to go, yes? Yes? That's correct. Yeah, that happened back here in this example. You know, we were stopped out on this bar right here, so the trade never happened, and we waited for another opportunity. We had a few black bars in a row, and then we could use the next signal as our breakout and take the trade off of that. Sure. Until I was okay, so how many bars after I identify a breakout bar will I wait to be triggered into the trade? Okay. For most trades, if it's set up and I'm waiting for it to trigger, I have a 5 to 7 bar rule. If I haven't triggered the trade in about 7 or 8 bars or so, chances are it's not moving in my direction and I'm going to go find a different opportunity. Yes, this is an hourly chart. That's on any chart whatsoever. Yeah. No, not necessarily. This was just an easy one to show a good example on. Since we were still using the ZRAN, I could have done the same thing on the daily chart as well. So the same thing applies on all time frames. That's correct. If you're stopped out on an XTL breakout in the up direction, the negative 0.5 does not constitute a shorting situation. It just cancels out the long situation. That is correct. Yeah, your stop is not an indication to go in the opposite direction. Sure. Okay, I'm going to continue to add some bars here, and you'll see that there was a lot more left in this trade here in the up direction. And let's say we missed completely this XTL breakout trade back here. We're going to talk now about an XTL continuation possibility. We have a trending market identified here with the blue bars, so we've got a nice uptrend going. And now we've started some sort of retracement phase. We've begun to pull back. Let's go ahead and take our Fibonacci retracement and see how far we've pulled back here. We've gone greater than 25% retracement. So this is a good retracement going on here in this overall trend. And you'll notice that we still have blue or black bars. We don't have anything red at this point in time. This is a possible opportunity for an XTL continuation trade. I'm going to bring up my stochastics, and you'll see that the stochastics are traveling downward. Let me add a couple more bars here. No, that went too many bars from what I wanted. Okay, here we have our stochastics below the 25 line. This is an indication that we're about ready to hook up along with this retracement, still having blue or black bars. This is beginning to set up for an XTL continuation trade. Now, before I get too far ahead, I need to explain the stochastics that we have in the advanced GET studies here. You'll notice when we're in an overbought situation here during this trend in the up direction, there's a black line at the top of our stochastics. We call that the false bar. So in the advanced GET tools, you have a false bar stochastics rather than just a generic stochastic study. What the false bar is telling you to do is ignore any sell signal that happens while that false bar is present. So many times up here, we have the red crossing the blue indicating a sell trigger from the stochastics, but the false bar is telling us to ignore that, telling us to not sell during this upward trend. Now, as the market starts to pull back in this retracement period, the stochastic falls below the 25 line, and we have no false bar down here at the bottom that tells us to ignore a buy. This is usually a good confirmation with our XTL continuation trade that this is going to be a nice buying opportunity. So we want no false bar on the stochastics. Is there a question on the stochastics? Minimum 25% retracement. Right. Right. The black bar is identifying the trend for you in the stochastics and helping you to filter out the bad triggers from the stochastics. Sure. So I'm going to go ahead and take my regression trend channels here and draw them in there from high to low on what we have here. Let's check our Pearson's R value. It's 0.907, which is above 0.900, so we're good to use the regression trend channels in this point. And I'm going to add a bar or two, and there we have a bar that closes outside of the regression trend channel. And the next bar, we would have been triggered to go long again for an XTL continuation trade. And as I start to add more bars in here, now we're starting to make some profit. And it looks like it just wants to meander sideways here for a while. So again, you could apply any kind of trailing stop that you want to in this market. I don't think we're going to get a really good Pearson's R on our regression trend channel in this instance, so we can't use that as our stop. We could do several things. Each time the market pops up and makes this P shape, can everybody see that P shape here, or a flag? If anybody's studied technical analysis and looked at flags, we have the mast, and out here is the flag. Each time we make a flag, we can take the low of that flag, which happens to be this bar at 130 on the 11. So that's $23.05, and establish that as our stop. And then up here we popped up and made another flag, so we could use the low right here, $24.30, and from there on we just kind of moved sideways, and we would have probably been triggered out on this one at 10:30 on the 16th of July. Well, in this instance here, see, this would have been our first area to use as a stop. We popped up again and made another flag, and we would have used the low of this bar. And in an XTL continuation situation, I would have probably taken off my complete position right here on this 10:30 bar, anticipating the possibility, because we still haven't had a red bar in here, of being able to do a continuation again. So I'm not really worried about keeping part of my position on at this point in time, because I'm looking for a possible situation where I can re-enter again. Right. Well, there's still the possibility that this is just going to retrace again. I'll throw on our Fibonacci retracements again here. See, we haven't gone beyond the 618 retracement, but there we have a red bar. So at this point, you know, all bets are off as far as this is concerned for continuation to the upside. But really, if you want to leave something on your position, that really has more to do with your trading strategy and your money management than it does with any rules for the XTL continuation trade. There's no rule in the XTL continuation trade that says you cannot leave anything on, or you should only take part of your position off. You know, it's really up to the individual trader at that point. That's correct. That's a good observation. We'll go ahead and apply that. As soon as we get a red bar, this is a breakout in the down direction, so we could begin to apply the same technique, anticipating a short. So our trade to go short would be $22.96. Our stop is $24.80. You can start adding some more bars here. And at this point, we've exhausted our 5 to 7, 8 bars or so of a time stop. We would just say, okay, we're not really trending in this market. We're just getting a whole bunch of noise as we kind of meander sideways. And this is where we stand as of 3:30 today. I'm sorry? That's correct. Yeah, we were never triggered to short the market in this situation here. So currently there is no XTL possibility in the ZRAN. Yes, you can still get in. The question was, let's see if we can, there's really not an example of it here. She asked, we'll just use this as an example. This is our first red bar, and if our trigger was down here, just manually draw it in. This was our trigger, and we had a black bar that triggered below. Could we still short it even though the bar was not red? And the answer is yes. As long as the bar does not go blue, you can still use that as a valid bar to trigger on. Sure. That's correct. Yeah, this study is used more in trending than range bound. If you're trading strictly a range bound issue, something like a stochastics or a MACD or something along those lines works much better in a sideways trending market. We incorporate volume into a lot of our strategies. If you attend one of our intermediate seminars, there is something to be said for volume, but it's not necessary to use the volume in a situation such as this. Volume spikes can oftentimes indicate the end or reversal of trends, so that is something that you can look at. But as far as being a rule of the XTL, that is not involved, no. Any other questions on the XTL? Okay, again, XTL was the expert trend locator. The blue bars indicate an uptrend, the red bars indicate a downtrend, and black is neutral. I'm going to go ahead and get rid of some of this that I've drawn on the chart here. Now, over the last 2+ sessions, we've talked about the Type 1 trading opportunity, both the buy and the sell. We talked about the Type 2 trading opportunity, both buy and sell. And we also have the XTL breakout and continuation trade, which are also in either direction, both buying or selling, bearish or bullish. It's all well and good to talk about all these trading strategies, but we really need to find a way that we can sort through the market, which has, upwards of 10,000 stocks to trade, very quickly in order to find some that are matching up with the criteria that we're looking for. So that's why in the end of day program we've incorporated a search function. I'm going to go ahead and bring it up here. Everybody see this search window that I have up here now? Okay. This is where we're going to start to put down some practical application to these techniques that we've used. We can fairly quickly sort through the entire market of data that we have on our computer in order to find some of these markets that are lining up with the criteria that we need for these Type 1, Type 2, and XTL searches. As a matter of fact, the ZRAN, the stock that we were looking at, I'll go ahead and go back to the daily chart here. This is a stock that I found while doing a presentation for a group in London, and I found it back on about the 16th of June, and it was in this position here. I'll go ahead and remove that and put the oscillator on there. And it was a perfect Type 1 setup. It was just something that had come up in the search that I ran, and I began to use it, and a week later when I met back with them again, it was started to make profits, and eventually wound up being a very good Type 1 trading opportunity. So this is a stock right here that I found using the exact search that I'm going to show you right now. In the search window, we have to identify a few things before we actually run the search. First thing in the upper left-hand corner is the portfolio. We need to decide what list of issues are we going to be using to search by? If I go ahead and hit this little gray button just to the right of where it says Issue List, this is a list of all the portfolios that I have in the Advanced Get program. Now I've got a bunch of them in here. I've done many presentations on this, so that's where all these come from. You can build your own by selecting the New button in the lower right-hand corner. And up will pop the list of all the available symbols that you have in your Get program. You can do several things here. You can begin finding symbols and adding them one by one, which I'm doing here now. Or, if you have a list on your computer somewhere in a text file, you can actually import a text file into Advanced Get and use that to build a portfolio. For instance, I have a text file of the S&P 500 on my computer. So I selected Import New List from the Display Issues From drop-down menu, and I have them in a folder labeled Nate, and there's my S&P 500 text file. It's just a listing of all of the symbols in the S&P 500. And when I select Open, it changes my listing on the left to only include the symbols that are in that S&P 500 text file. I manually made up that list, or you can, I think the way I got that list was I went to the Exchange's website and I found a listing of all the S&P 500 stocks on the Exchange's website, and I copied that into a text file. But I did create the text file on my own. At the end of the session here, I'll give everyone my email address again, and if you would like these text files that I have the Dow 30, the S&P 100, the S&P 500, and the NASDAQ 100, all in text files, and if you'd like those, you can just send me an email, and I will email those to you, along with some other things that I'm going to show you with the search program. So let me go ahead and delete all of these, and with my S&P 500 selected on this left-hand side, I can go ahead and just hit the Add All button, and it takes all of these 500 symbols, places them on the right, and I can title my portfolio SP 500 and hit OK. So now my portfolio that I'm searching is only the S&P 500 stocks. Next thing we have to establish is what parameters we're going to look for. And this is where we get specific about the type of search that we're going to look for. The first demonstration I'm going to do is concerning the Type 1 buy. Everybody remembers a Type 1 buy. I'll go over it again here on the ZRAN chart again. First thing we're looking for is that we have established a wave 4 in the market. The second step was that the 535 oscillator had returned to 0. The third step was looking for a PTI, or a profit-taking index, above 35. And the last check is that we are holding at least the red wave 4 channel. In this case, the green channel is still holding. So those are the criteria that we're looking for. And in the search, when I go into parameters, I'll go ahead and get rid of the ones that I have in here. We'll start from scratch again. I'll select the New button, setting up a new list of parameters that I'm going to title Type 1 Buy. So I've given it a title. The next selection down is bars. Bars has to do with how many bars ago are we looking on the search. With bars set to 1, it's looking 1 bar ago on each chart to see if we meet the criteria at that point in time. If I set the bars to 5, it means that we are looking anywhere within the last 5 bars to see if these criteria were met. So it's not specific to 5 bars ago. It's saying, have these criteria been met anywhere during the last 5 bars? The next section over is the time period that we're looking at. We can look at 60-minute, daily, weekly, or monthly. I'm going to select daily for this. Active issues only has only to do with the futures. With active issues only selected, it will not give you results on expired futures contracts. We're just looking at the stocks in the S&P 500, so this has no application for what we're doing. Being that we're looking for a type 1 buy, we need to first find out that we're in an Elliott Wave 4. So I'm going to select Elliott Wave 4 as one of my criteria and hit the Add button, which places it over to the right-hand side under Parameters. We're also looking for our PTI to be above 35. I'll add that over. And we want an oscillator pullback as well. I'll put that on the right. These are the basic things that we're looking for in any type 1 situation. And we have to make sure that we specify with these parameters the direction of the trade that we're looking for. We're looking for a possible type 1 buy, so the trend is in the up direction in a type 1 buying situation. We're looking to find a bullish position. So I'm going to select the Elliott Wave 4 and hit the Edit button to the right. I'm going to set the direction to up. Anytime we're talking about these parameters and direction, we're talking about the overall trend. So the overall Elliott Wave trend is in the up direction for a buying opportunity. Bars being set to 300 means it's going to use 300 bars to calculate the Elliott Wave count. I'll say OK on that. The PTI, I'll edit that as well. PTI, we want it to be at 35. We want it to be above 35. Number of bars to calculate the Elliott waves again is 300, and the direction of Elliott waves is up. And I'll hit OK. Oscillator pullback, we want to edit that as well. We're looking at a 535 oscillator, and the minimum pullback required, as we talked about in session 1, is a 90% pullback. And does anybody remember the maximum percent pullback? 140, excellent. So we'll put in 140 for the maximum pullback. And again, the direction of the Elliott waves is in the up direction. For the type 1, the strength of the breakout bands has no bearing, so we're not going to mess with that. And we'll hit OK. So we have our Elliott Wave 4, our profit-taking index, and our oscillator pullback. Now there are other criteria that we can add to this. For myself, I usually add an average volume in there. I'll put that in there. And a price range as well. I'll put that over there. For average volume, I'll edit that. And I only want to look at stocks that average over 500,000 shares traded a day. And the price range, we'll look at anything above $15 and hit OK. So here is our setup for a possible type 1 buy and the parameters. Now I'll go ahead and hit OK, and you'll notice type 1 buy is placed in the parameters setting. So we've told AdvancedGet what portfolio or what grouping of symbols we want to search and what criteria we want to filter these results by. The green button on the left-hand side looks just like a play button on a tape recorder. That's going to be the button that starts our search. To the right of that is a button that looks like an equal sign or a pause button on a tape recorder. It's just exactly that. This is the pause button. If you're in the middle of running a search and you'd like to pause it and resume it again, you'll use the pause button. After I press the green play button, the square button right next to it will turn red, which is the stop button. If the stop button is used, you cannot resume the search. The stop button is understanding that you are terminating that search and you're going to run a new search. So if you want to stop the search to resume it again, you want to make sure you use the pause button. I'll go ahead and select the play button, and you'll see results start showing up almost immediately. Something that you may notice about the results right off is that it gives us a column for each one of the criteria that we've laid out in the search. And not all of these results meet every one of these criteria. It's because at the top of the list of results it says any parameter. So it's giving us a result listing for any symbol that meets any one of these criteria. In order to change that so that it has to meet all of the criteria, I'll left click where it says any parameter. And it now changes to all parameters, now only giving me the listings that meet all of the criteria that we've placed on our search. Okay, it's gone back to the status being ready, indicating that the search is completed. And we found 59 out of 481 symbols met our criteria, roughly 12% of those searched. And this is our list of results down here at the bottom. If I wanted to look at a chart of any one of these results, I could just double click on it. I'll double click here on Alcola Incorporated, and up pops a chart of Alcola. And I can apply the Elliott waves and the Elliott oscillator, and you'll see on our chart here that we're in an Elliott wave 4. Oscillator has returned to 0, but because of the criteria, we already know that it has not exceeded 140% in the down direction. And our PTI is above 35. The only criteria that cannot be searched for in a type 1 is whether or not the wave 4 channels are holding. But a 2-second glimpse of this chart shows us that the red channel is still holding in this case. So Alcola Incorporated is a possible type 1 buying situation at this point. Yes, there are no blue bars in here. We're not using the XTL in this situation. We're just using a type 1 trading opportunity, which deals with the Elliott waves and the Elliott oscillator. XTL is a separate model, and we do have searches that you can do based on XTL. But for right now, we're just talking about the type 1. Yes, you can. The question was, can I make a template of everything that I'm trying to do so I can quickly go through all of these charts? There's a couple of ways to do this. Let me go ahead and close down my ZRAN chart we were looking at. So here's my results. This is the first chart that came up from my search. At this point, I can go to the window menu at the top and select Tile Vertically. What this does is it places the chart side by side with the search screen. So now I can see both the chart and the search at the same time. And I can just quickly double click on each one of these listings in the results. So that's one way that you can go through this. And that's the quick way. If you run a search in which you have a couple hundred results, it's going to take you quite some time to go through all of those. So now I'm going to teach you something that is a little bit more advanced, but I think you'll find it very helpful. Let's just assume that I have 259 results here, and I want to do a little bit more with this. I can actually take this list of results and save it as a portfolio in my Advanced Get program. I'll just right-click down here in the area where the results are listed and select Make Portfolio. And up pops my Edit Portfolios menu, on the right-hand side of which are all the results that showed up in my search. So I'll just title this Results 7, what is the date today? The 23rd, so 7/23/03, and hit OK. And now I have a portfolio of that list of results. What I need next is a chart that is set up how I like my charts to show up in Advanced Get. It has all the studies that I'm going to be using. The Elliott waves are turned on, and the 535 oscillator is turned on. And what I can do is go to Page and Auto Page. Now, I don't believe we've covered pages yet in any of these sessions. That's going to be something that I'm going to cover in session 4 on next Wednesday. I'll just go ahead and show you this, and if you'd like to refer back to it, you can. I can select a new folder here, which I'll just call 7/23/03, so we can keep it consistent. And I need to load the portfolio that I just saved in the portfolio listing. I'll select the button, and there's my results of 7/23/03, and hit OK. So I've loaded the results. I make sure that Save Auto Pages is checked. My rotation speed is set to 0. And I have the folder highlighted in which I want these pages to be saved. When I select the Auto Page button, you'll see it quickly flip through all of the results from the search that I have. And what it's doing is saving a page of each one of these results, which I can go back and look through at my own leisure. I can delete pages that are not meeting all the criteria. For instance, if we find one that has broken the Wave 4 channels, I can delete that page, and then I'll have an entire folder full of possible Type 1 buying situations. Here's Yum Brands Incorporated. It was the last one in our search. It's looking very nice. Go ahead and apply trigger technique. Right on the border there of our regression trend channels, we'll see once another couple bars come in if we make a new low whether this is going to meet it or not. But break across the regression trend channel would trigger a buy in Yum Brands. I can go back. Yahoo is setting up. Watson Pharmaceuticals. Here's WMI. What's wrong with this one here? Broken the Red Wave 4 channel. We don't need that one anymore. So WMI, and go ahead and delete that page. Go back again. Find another one that we need to delete here. The Wave 4 is going to be marked, like in this case here, we have 1, 2, 3, 4 bars after the Wave 4 is marked there. That doesn't mean that this is an incorrect Wave 4. Wave 4 will always be marked at the lowest bar of this downward retracement movement. So if we make a lower low over here, this 4 will transfer over to the new low. So right. Well, because we have not marked a Wave 5 here, we are still in Wave 4. This is still classified as being in a state of Wave 4. So Wave 5 has not been marked yet. That's a very good question. Okay, in this chart here, today's action has actually made our Wave 5. So 1 bar ago was Wave 4. This actually has more to do with whether we're in online mode or offline mode, which I really didn't want to get into, but since I've brought this up, I really need to. In the lower right-hand corner, you see my OK and my DM OK in green. This indicates that I'm in online mode, which gives me a bar for today on my chart, even though this data is not on my hard drive. So it appears that the search was incorrect in what it showed me here on this chart. But in reality, it's not using this last bar to search, because this bar is not local on my hard drive. It's being brought in from the data manager here from eSignal. So sorry for the confusion there, but that's what that is involving. This is end of day data, but because I'm using the newer eSignal Wizard data service from AdvancedGet from eSignal, it allows me to display a bar for today's data on my chart, even though that data is not yet local on my hard drive until I download at the end of the day. And here's another chart right here. NeSource Incorporated definitely has gone beyond the Red Wave 4 channels. So there's no need to retain this chart here either. So we can delete that page as well. So you can see that that auto page allows me to quickly create a saved page for each one of my results and go through them at a nice easy pace. So that's a nice quick demonstration of how to use the search feature. Not only can we do type 1 buy, we can do type 2 buy, we can do type 1 and 2 sells, we can do XTL breakout trades, we can do XTL continuation trades. And let me go ahead and put up my email address here again. It's just Nate at advancedget.com. If you want to send me an email later today, I'd be more than happy to send you the text files that I spoke of earlier on how to import a new list into AdvancedGet, as well as some Word documents that will show you how to set your search up to look for Type 1, Type 2, and XTL buys and sells. It's just a very simple document with pictures that shows you how to set that search up. The real time is a little bit different in how we do the searches in the AdvancedGet scanner. Those are already pre-built for you, so you just need to select them from a drop-down menu. So no need to have that in there. Absolutely. Sure. Okay, let me go ahead and we've got search window up there. Let me get rid of that. So here we're looking at NiSource daily. I'm going to go ahead and go to File and New Chart and go to NI. And there's NiSource, and I'll load up a weekly and hit load. So what I have is a weekly on top of a daily chart, but I can't see both of them at the same time. I just need to go to the window menu and select Tile Vertically. And now I have the weekly on the left and the daily on the right. Just go to File and New Chart to bring up the second chart. And then once you have two charts loaded, when you go to the window menu, you'll see down here I have two charts listed in my window menu. And at that point, I can do Tile Vertically or Tile Horizontally. Sure. Are there any other questions on the XTL or the search? There is a search specific for XTL. The Type 1 and the Type 2 do not include the XTL as part of the criteria. We're just looking mainly at the Elliott waves and the oscillator for Type 1 and Type 2. If you were doing an XTL breakout or an XTL continuation search, then you would use XTL in your search criteria. And that is in the search listings that I'm going to email to anyone who would like them. I believe I can get it in PDF. Just make sure that when you email me, you specify that in your email. Yes, sir. Okay. I don't have any documentation on it, but this WebEx presentation that I'm doing right here will be, it is being recorded, and it will be posted on the internet later this week. Absolutely. Sure. Yes, and it was actually posted this morning. The person who posts these to the web thought he had done it before, but for whatever reason it didn't work, and I had to point that out to him this morning, and it did get posted this morning as well. You can use the XTL and the Elliott together. That's called mixing models, which has its pros and cons. The pros are when models line up, that's usually a very good indication. The cons are you're going to take a lot less trades that way. And it gets to be an extreme to the point where I've talked to customers who have had every single study in the program on at the same time, and they weren't going to take a trade until all of them lined up. So there is a point at which you have to say enough is enough, and for most intents and purposes, the simpler, the better. A lot of that depends on how good you get with each one and being able to recognize the good from the bad. There are a lot of Elliott situations that will show up. And this is a good example right here, this knee-source daily chart. Even without the wave 4 channel showing on there, I can just look at this chart from doing Elliott long enough and say, this is just not a pretty Elliott chart. And I would not want to use Elliott to trade this chart. So, you know, it may meet the rules, but it just doesn't look right as far as an Elliott basis. So to say that one, the Elliott versus the XTL, is more accurate than the other, it's difficult to say because of the art of trading rather than just the science of trading. I know some of you have probably seen Mr. Michael Quambeck, one of our senior presenters out of Chicago. His favorite study in the program is the XTL and uses it almost exclusively. So it's just, he likes it better. It doesn't necessarily mean that it works better. It's just something that fits the way he likes to trade better than the Elliott model does.